Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard Macbeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
It's a pleasure to be on your show.
Hilliard, CMHC predicted a 9 to 18% drop in real estate prices. What's the reaction from the real estate community to that?
Well, I think you could almost call it outrage. They reacted very aggressively, suggesting that that's not possible, that house prices couldn't go down that much, which of course is crazy because I did a review of the last 6 or 7 housing bear markets, and the average was 36% decline. So it would be a very mild bear market if it only went down 18%. But it wasn't just the realtors, it was the banks. So the banks reported their earnings last week, and they, as part of their estimates of future loan losses, which they are now required to do as part of the new accounting rules, they had to incorporate a forecast of house prices. And one of the banks actually had house prices going up 4%, which they got from the realtors, and another one had house prices going down 7%, and a third one didn't disclose how much they thought house prices would go up or down, but I'm pretty sure it wasn't anywhere near as drastic as 18%. So the estimates are all over the map, but obviously 18% wouldn't be much of a drop in house prices given the doubling and tripling we've had in the last 20 years.
And of course, with no one able to see houses until very recently in most of Canada, there were no sales. So what are you judging these numbers on?
Exactly. I think people are willing to buy like a 500 square foot condo, brand new, sight on sea, and people do it every day based on future construction plans. But if you're looking at a house or something, it's not very often that people are willing to go ahead and make the commitment. And of course now nobody knows for sure if they'll have a job or what their income is going to be. And so, the number of buyers is extremely small. So of course we don't know how much prices might have come down because we need transactions to be able to calculate, the drop in prices. But, it seems likely that, with the new listings that are being added every day, at a much faster rate than the sales. There still are some sales somehow. There are some sales every day, but the new listing ratio to sales it's overwhelming by the number of new listings.
Well, in my neighborhood in New Westminster on the waterfront, a brand new tower where they were selling 500 square foot condos for $500,000 to start with, I believe has dropped down to $420,000.
Yeah, so, that's a big drop. That's a substantial, almost 20%. That's the 18% that CMHC was talking about right there.
Yeah.
But it's going to be, this is a serious recession, and of course the banks are going to start. I've already heard anecdotally that the banks don't take your payslips as golden anymore because they want to know. Yeah, in the past you made so much per week or per month or whatever, but what is the likelihood of you continuing to be able to make that? Are you still, what's the future? And which used to be normal, but for about 10 years in Canada we ignored all that. And if the lender starts coming back with questions about what's the likelihood of keeping your job, what kind of business are you in, what's your generation of your income, there's going to be a lot of failures to close just based on inability to get financing.
Now, is it the bank's best interest to kick all this money out? I mean, the government is supplying so-called near-free money in Canada, 0.25% from the Bank of Canada. How come consumers never get to see that cheap money in bad times?
Well, the consumer becomes so the consumer, the way we can judge that is with the savings rate. So the savings rate was at record low levels for the longest time, several years now in Canada. And, now it's jumping up to levels unheard of. Even in the Great Depression, savings rates never got up to 30% or more. Now, so far we only have the numbers in the U.S., which are 33% savings rate, which is crazy, right? It's just unheard of. And, so that's going to be a huge impact to the economy but also to bank revenues, because banks don't make nearly as much on, savings accounts, even though they don't pay the interest on them. They don't make very much on them. They make way more money on loans and credit cards and automobile loans and mortgages and all that kind of stuff. They probably make the most on auto loans and credit cards, the second most on mortgages and HELOCs, and the very least on deposits. So it's going to have a huge impact on the whole financial system.
Well, in Canada, a lot of people who lost their jobs got the $2,000 a month aid from the government. And for the people who didn't lose their jobs, the ones who got to work from home and so on, there weren't any places to go out and spend your money at except the grocery store or the drugstore. So they're telling me they've saved a lot of money during this period as well.
Absolutely. That, most of that jump to 33% savings has to be coming from the higher income people, because the people that are relying on the $2,000 a month, CERB payment, they're probably spending still, most of their income, but it's a very unusual situation. And I think uncertainty, when Keynes wrote his book in 1936, he talked about uncertainty as being the number one factor. And of course, starting in about 1960 or so, the economists started removing the uncertainty from all of their models and their equations. But it's the biggest factor, and we're going to see it again here when people aren't sure about their job, or if business people aren't sure about the spending of the consumer. Everybody just goes on pause. Everybody puts everything on hold, and it has a huge impact. Probably temporary, but it could be quite a severe impact over a period of a couple of years if people just stop making decisions to go ahead. They start to put everything on pause.
And if you're not going into the office every day, do you need a new suit jacket? Do you need new shoes, a new belt? All those things, there's that trickle down, because at home you know exactly what you wear, or in a lot of cases don't wear.
Yeah. I've been looking at the closet myself thinking, I'm only using like about a tenth of the closet right now. It's like, what do I need with that other 90% there? So adding to it doesn't make any sense at all. A lot of people like me probably are going through a reassessment of even having an office downtown. I've learned how to work from home, and I was always doing maybe 1 or 2 days a week from home. But I realize now that it was quite stressful to work sometimes from one place and sometimes from another place. So the trick is to make a permanent decision to work from home 100% of the time, and then only go in for meetings and for, collaboration and that sort of thing. So I think that's what I'm going to do. And, I bet a lot of people are thinking the same way. So that's going to have a huge impact on office tower space, which is already, at least in Edmonton and Calgary, is a massive surplus. But I suspect it'll hit Toronto and Vancouver as well.
With that in mind, too, what about the small businesses you find on the ground floors of those office towers, the little sandwich shops, a pizza shop, perhaps a shoe store, or a place that sells women's wear?
Yeah, those places are. I did go into our office tower once in the last 2 months, I guess, to pick up some stuff, and I talked to a hairstylist that owns the store there, and he said they got a 2-month deferral on their rent. Now they've reopened, but he said it's much more expensive now to operate with all of the measures they have to take, and also the number people they could see per day is much smaller than before. And he doesn't think he can stay there. He's asking for more relief from the office tower owner, which is a pension plan, by the way. And, but he said they're not willing to discuss. So he's probably going to have to move out of and then already, clothing stores and that are moving out or shutting down. So it's going to be a very different landscape when we come out of our hibernation here.
Mm-hmm. And for restaurants, a popular Irish restaurant I go to, they added $4 to some of the food items because they only have half the tables, so they're only making half the money. And like I said, it's popular, so those tables are full with the limited number of people they're allowed to have, but they still have to charge you more. And hair salons, nail salons, and so on, I've heard, are also adding 5 to 10% surcharges to help cover their expenses.
Yeah, and I'm not even sure if that'll be enough. Restaurants didn't have a big profit margin to start with, so when you start saying to them they have to operate with half the seats or something like that, it's going to be very difficult for them to make a profit.
We'll have more with Hilliard Macbeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, small business supplies something like 72% of the jobs in Canada. What's the job outlook with so many small businesses either still closed or restricted in the number of customers they can have?
It's going to be tough. The estimates nationally are about 20% of people have applied for help because they've lost their jobs or they're temporarily on furlough or they've had reduced income. About 14 to 20% of all the people with mortgages have applied for deferrals, and now they're already talking about extending the deferral. So the deferral that was offered on mortgages was 6 months, but that's only takes them to September. And so there's a report today already that they might need a further deferral. But at what point do you say these people's jobs are never coming back? At what point do you say they're never going to be able to pay their mortgage? So it's there's about, I think it's roughly around 20 million people, employed in Canada. And, so it could be a very large number. These numbers are so astronomically large that it's inconceivable, but we'll see. We won't actually see the second quarter GDP, for about another, I guess that'll come at about the 1st of August. So we're looking at, 60 days away. Well, we're going to start getting monthly reports and that sort of thing. And the numbers are going to be, especially ugly. And, which of course makes you wonder, how can the stock market be that close to record high levels when the numbers are going to be so ugly?
Mm-hmm. Well, taking a look at the employment picture, who's investing in the stock market? I've heard that people who are used to betting on professional sports have actually turned to the stock market. I guess they feel they can still get a thrill if they get a big score.
Well, it is very interesting to understand how the stock market could be rallying. So from the March 23rd was the low. So now here we are in early June. And the rally's been pretty spectacular, about 35% off the low. Now, that doesn't take it back to the February 20th high, but it takes it quite close to the high, about 10 to 15% below the high. And but the thing is, the ratio between prices to earnings is going to be very soon at record high levels, because when the GDP drops as much as it's going to drop, 10, 20, 30%. Earnings also will drop, and then the ratio of price to earnings will be extended to levels we've never seen, even including the dot-com bubble. So the people that are speculating in the stock market must be very short-term people, because they wouldn't be looking at, boring things like price to earnings ratios like I do. They're just looking at momentum, and they can see the momentum is spectacularly on the upside. But of course, that can flip in a heartbeat. So I honestly think it's a lot of hedge funds, a lot of speculators, but the real core money that is in the stock market, sort of like the 80% of it, I would think they're scaling back their risk factors. If they haven't already, they will be very soon, because it's extremely unlikely that one sell-off we had in February, March is the end of the bear market in stocks. There's probably going to be one or two or three more sell-offs before we're done with this.
We'll have more with Hilliard Macbeth right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard Macbeth. Hilliard, what's happening with commodities like oil?
Well, oil has rebounded. It's interesting about oil. We had that incredible thing where the price went negative on the futures contract. I guess it was in March. And since then, it's normalized back to where the oil prices are at $30 a barrel, roughly. Maybe a little bit higher than that. And Western Canada Select is at $20, something like that. But what I was watching, that was the contract that expires in the next 30 to 60 days, and everybody's watching. But I was watching the 1-year contract for crude oil, which trades, so in other words, June of 2021, and it never really budged from around $30 to $35. So right now, July futures on oil is around $36. It's gone right back up to where it was for the 1-year contract. And most of the people in the industry are using that 1-year contract for the hedging activities. So a lot of that was just really a speculative aberration of some people that got caught on the wrong side of the market and had to liquidate their positions at a negative price. But the long term thing looks like it's settling around $30 to $40. What's interesting about that level is it's not quite high enough for the shale oil producers in Texas, and it's also not quite high enough for some of the oil sands producers in Alberta. So some of the oil sands works at $35 a barrel, some of it doesn't work very well at $35 a barrel. But all of the shale oil people are struggling at that level. So once this current glut in oil is worked off, then the oil market could rebound back up to a slightly higher level. But the problem with that is that the shale oil producers can turn it on very quickly as well. So they stop producing, they shut things down, and if the oil goes back up to $60, they'll turn it right back on again. So I think the excess supply of oil will be with us for a long time, unless the economy goes back to full steam. But it's hard to imagine that happening anytime soon. I've seen forecasts that the economy might take 10 years to get back to where it was before the COVID crisis hit.
Wow. Well, although a friend pointed out, although the isolation and staying at home was extreme, economic conditions, no matter how bad, always bounce back. If you're dead, there's no coming back.
Well, the people that have died so far in the COVID, this is going to sound a little bit morbid, but the Premier of Alberta, Jason Kenney, pointed out that the average age is something like 82 or 83, and in a particularly, I thought, kind of harsh way of presenting it. He pointed out that their life expectancy is only 2 years longer than that. So, kind of like, what's the big deal? He didn't quite say that, but so of course those people are not big spenders. So you could make the argument that when the young people can go back out and start spending again, maybe we can get back to something close to normal. But I somehow I don't see it. I think this is going to be a situation where some things are changed forever. And you mentioned one of them already is the buying clothes to go downtown and, wear a suit to the office and that sort of thing. That could be permanently impaired. Driving your car back and forth to the office if people opt to work from home. And if one of the big things I think holding people back from working at home was their employer wouldn't let them. But now that the employer is more comfortable with it, maybe they will get permission to stay home and work from home. So maybe they only need one car instead of two cars. So some of these changes are permanent, and some of them actually are going to change the makeup of GDP, gross domestic product, as well. So an economy that was based on 70% consumer spending, which is what we had in North America, could be a very different kind of economy after COVID compared to pre-COVID.
Mm-hmm. And also, too, travel agencies, how many people are going to want to get on a packed airplane and go off to a country like Italy where they had one of the highest death rates?
I've been thinking about that a lot because I guess that's one of the things that I miss the most is the ability to go. Albertans are not even allowed to go to BC. So, Albertans like to come to BC, but we're not allowed to. So, after a while, you start thinking about getting on a plane, going to Hawaii or Mexico or something or go to the ocean, go to Italy.
Well, Greece is planning to be open, I think, July 1st.
But I don't think we're allowed to go. I don't think we're...
Well, you can go, but then you have to quarantine for 14 days when you come back, if you can find an airplane that goes there.
And if you can get health insurance, because what if you get sick when you're there?
Oh, yeah.
So most of the health insurance providers are saying, I haven't checked with ours yet, but most of them are saying, if you get COVID, if you go to Greece and then you get COVID, you're on your own. You're out of luck. We can't help you. So I checked, in 2003, SARS lasted about 6 months. And in the spring of 2003, it ended. And hotels, cruise ships, and airlines were the best performing segment of the stock market. They bounced back, huge surge in spending in those three areas. This time it looks like it's not going to be quite the bounce back that it was back then because, COVID is obviously everywhere and we just won't be able to open up like we did after SARS quite so dramatically. So the rebound there'll be a rebound, but it won't be as dramatic as we saw in 2003.
Also, back in 2003, if there'd been a vaccine, perhaps 80 or 90% of people would have taken it. Surveys now say only 60% of people are interested in a COVID vaccine because so many people are scared of vaccines now.
It's interesting that a lot of people have been talking about the vaccine as a way to restore the economy to health, but the reading I've done, it's likely that it's going to take quite a long time to get a vaccine. And they never did find a vaccine on SARS, Ebola, HIV. All these are viruses that are very devastating in their impact. They failed to find a vaccine. So, yes, there might be a vaccine on COVID, but there might not be. Or if there is one, it might not work. Or, as you say, if there is one and it works, you need, like 80% of the people have to agree to take it for it to really work well. So if they're not willing to take the vaccine, then it's going to be very difficult. So even the production of 7 billion doses of the vaccine is going to be extremely difficult. So it's more likely that it's going to be with us for 36 months, somewhere in that range, before we get a real solution like that.
Hilliard, thank you so much for chatting with us.
Nice to talk to you again.
My guest has been Hilliard Macbeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.